President Donald Trump has issued a stern warning to the BRICS nations, urging them to make clear commitments to prevent the rise of any currency that could challenge the U.S. dollar. Trump reaffirmed his dedication to maintaining the dollar as the world's primary reserve currency, warning that severe economic sanctions, including 100% tariffs, would be imposed on any nation attempting to challenge its dominance. Late last year, Trump made a pointed statement, declaring that the BRICS bloc has no chance of replacing the U.S. dollar in international trade or elsewhere. He added that any country attempting such a move would be met with tariffs and cut off from the U.S. market. Earlier this year, Trump reiterated his stance on social media, emphasizing that any efforts by BRICS nations to undermine the dollar would not be tolerated. He insisted that these nations should make an unequivocal commitment not to create or endorse any rival currency. Those who defy this stance would face 100% tariffs and total exclusion from the vast U.S. market. Despite these warnings, Brazil, currently holding the BRICS presidency, is advancing reforms aimed at reducing reliance on the U.S. dollar. These reforms focus on facilitating cross-border payments in local currencies, aiming to foster financial autonomy and reduce transaction costs in global trade. Brazil's strategy includes leveraging technologies like blockchain and enhancing payment system linkages to streamline international payments. A significant part of Brazil's plan draws inspiration from its success with the Pix instant payment system, which has rapidly overtaken traditional methods like cash, credit, and debit cards since its launch in late 2020. Brazil has already implemented a local currency payment system, SML, for trade agreements with Argentina, Uruguay, and Paraguay, allowing for direct settlements in Brazilian reais and bypassing the U.S. dollar. Although the system currently requires several business days to process, there is optimism that integrating instant payment technologies could make these transactions faster, more secure, and cost-effective. Later this month, BRICS representatives are set to meet in South Africa on the sidelines of the G20 meetings, where Brazil will present its plan for the July BRICS summit. The group has expanded recently, with countries like Egypt, Ethiopia, Indonesia, Iran, Saudi Arabia, and the UAE joining. The move toward enhancing local currency payments is part of a broader strategy to increase the financial autonomy and resilience of emerging economies. The U.S. dollar's path to becoming the global reserve currency began after World War II, when Allied nations convened at Bretton Woods in 1944 to create a new international monetary system. The U.S. dollar was chosen as the central currency, with other currencies pegged to it and the dollar convertible into gold at a fixed rate. This system laid a stable foundation for global trade and cemented the U.S.'s economic and political dominance. The Bretton Woods system lasted until 1971, when President Nixon suspended the dollar's convertibility into gold, marking the end of the Bretton Woods era and the start of floating exchange rates. Despite the shift, the dollar has remained the dominant global currency, further solidified by the petrodollar system in the 1970s, which established oil sales as exclusively dollar-denominated. Today, the dollar's position is reinforced by deep financial markets, political stability, and international institutions. Trump's recent remarks reflect growing concern over challenges to the dollar's supremacy, particularly as BRICS nations explore alternative currencies and payment systems. If these efforts to reduce reliance on the dollar succeed, the consequences could include diminished demand for U.S. treasuries, higher borrowing costs, and a weakened geopolitical influence for the U.S. In this video, we'll examine Trump's warning to BRICS nations and evaluate the progress these countries have made in reducing their dependence on the U.S. dollar. Let's begin by exploring the ongoing trend of dollarization within the BRICS bloc, as members gradually increase the use of their local currencies in trade to enhance financial independence. In early 2023, China and Brazil, the two largest BRICS economies, reached an agreement to conduct trade in their own currencies, the Chinese yuan, CNY, and the Brazilian real, BRL. This move eliminates the need for the U.S. dollar as an intermediary, streamlining trade and reducing exchange rate fluctuations. In 2022, China-Brazil trade reached approximately $150 billion, with China being Brazil's primary trading partner. Using local currencies will simplify transactions, cut conversion costs, and foster greater financial autonomy. Iran and Russia have also made significant strides in integrating their financial systems to enhance bilateral trade and avoid Western sanctions. This cooperation includes connecting their national payment networks and mutually accepting each other's bank cards, further strengthening their economic ties. These initiatives represent a growing push within the BRICS bloc to challenge the dollar's dominance in global trade. And the consequences of such moves could be profound for international finance and U.S. economic influence. In early 2023, Iran and Russia integrated their banking systems, granting Iranian banks access to Russian financial institutions, as well as over 100 banks across 13 other countries via Russia's SPFS system for financial messaging, an alternative to SWIFT. This integration allows for the issuance of letters of credit, transfers, and guarantees without relying on SWIFT, mitigating the impact of Western sanctions. In July 2024, Iran's central bank announced the integration of the Chaitab interbank network with Russia's MIR payment system. This move enabled the use of MIR cards in Iran, simplifying transactions for Russian tourists and businesses. Iran and Russia further deepened their financial integration by allowing Iranian bank cards to be used in Russia, facilitating easier payment processing and cash withdrawals for Iranian citizens abroad, while strengthening commercial ties between the two economies. India and Russia also began using local currencies for trade, especially in the energy sector, following the imposition of Western sanctions on Russia in 2022. In 2023, Russia became India's primary supplier of crude oil, with a significant portion of transactions conducted in Indian rupees, INR. This arrangement allowed both nations to bypass dollar-based payment systems, shielding them from external economic pressures. South Africa, a BRICS member, has also increasingly preferred settling transactions in its own currency, the rand, ZAR. China remains South Africa's largest trade partner, with bilateral trade exceeding $50 billion in 2023. South Africa has signed agreements to settle certain imports, including machinery and electronics, in yuan, CNY, reducing its reliance on the dollar and boosting liquidity in African markets. BRICS Pay, a decentralized payment platform created by the BRICS nations, Brazil, Russia, India, China, and South Africa, enables smooth cross-border transactions in local currencies. The initiative aims to reduce reliance on Western-dominated financial networks like SWIFT, thereby strengthening the economic sovereignty of its member states. Launched in 2018 by the BRICS Business Council, BRICS Pay utilizes existing national payment infrastructures, including Russia's MIR network and India's Unified Payments Interface, UPI, to facilitate efficient international payments. The system allows users to send and receive payments in their local currencies, simplifying currency conversions and lowering transaction costs. BRICS Pay is built on blockchain technology, ensuring secure, transparent, and efficient financial transactions across member nations. Its decentralized architecture combines centralized systems for domestic operations with a decentralized structure for international transactions, allowing for regulatory compliance and technological flexibility. The system's scalability enables quick deployment and adaptation to various technical and regulatory environments, handling increasing transaction volumes and incorporating new participants without sacrificing efficiency. In October 2024, during the 16th BRICS Summit in Kazan, Russia, BRICS Pay was officially launched as a blockchain-based cross-border payment system. The initiative marks a significant step toward reducing the dominance of the U.S. dollar in global transactions and promoting a multipolar financial order. In addition to payment systems, BRICS nations have focused on accumulating gold reserves as part of a strategy to reduce dependence on the U.S. dollar. By Q2 2024, BRICS countries had amassed approximately 6,200 tons of gold, representing 21.4% of global reserves. Russia leads this effort with 2,340 tons, followed closely by China with 2,600 tons. Brazil has nearly tripled its gold reserves from 2018 to 2024, signaling a robust strategy to strengthen its economic defenses. This accumulation of gold reflects BRICS's broader goal of reducing reliance on the U.S. dollar and enhancing financial sovereignty by diversifying their monetary assets. Together, these measures, gold accumulation, decentralized payment systems, and local currency settlements, are not just about safeguarding BRICS economies, but also about signaling a shift toward a more multicentric global monetary order. BRICS nations are paving the way for a financial ecosystem that prioritizes stability, independence, and fair economic participation in the global arena. The push for de-dollarization is driven by several factors, including the desire for economic sovereignty and stability. The dominance of the US dollar gives the United States significant influence over the global economy, and its monetary policies can create volatility in other countries. By distancing themselves from the dollar, nations aim to regain policy autonomy and reduce their vulnerability to external shocks. Additionally, reliance on the dollar exposes countries to US sanctions, which can limit access to international financial systems. Countries like Russia and China are exploring alternative currencies to maintain their economic independence and avoid these restrictions. This growing trend of reserve diversification is helping to weaken the dollar's dominance, with central banks increasingly diversifying into other currencies and even gold. Political and strategic considerations also play a role, as nations like China and Russia work to counterbalance U.S. influence by promoting the use of their own currencies in international transactions. Trump has warned BRICS nations that challenging the U.S. dollar's dominance will not be tolerated, threatening severe tariffs on those who attempt to weaken the dollar. He has demanded clear promises from these nations not to support or establish any rival currencies. If they fail to comply, they will face 100% tariffs and be excluded from the U.S. market. Trump's strong stance underscores his commitment to maintaining the supremacy of the dollar and preserving America's economic influence in the world. The global shift toward de-dollarization reflects a broader reconfiguration of economic power, with emerging markets asserting their financial autonomy. The BRICS initiative represents a direct challenge to the dollar's dominance and a declaration of sovereignty, marking a pivotal moment in the global economic landscape. Thank you for watching this video. We appreciate your support. If you found our content valuable, please like and subscribe to stay connected with our community. Your support means a lot to us. Feel free to watch another video from our channel now!